Hey everybody, Brian here from quantlabs.net. Okay, I got two, maybe three questions out of this query I got from a recent Quant League member. I'm just going to read you the highlights that I take away and show you what I think the best way to approach it and answer this. So this person has developed some strategy development or wants help in it, does software development and done development algo trading in Java. Try developing some strategies, trend-based, use technical indicators. We'll talk about that in a minute. Open, high, low, close-based strategies. However, this is the highlights why I underline this. However, what I'm doing is back testing. I find that many days I'm getting success with my strategies and many days with a negative P&L as well. All right, let me just go further. I wanted to take your help and this kind of help since I joined Quant Labs last year. If you could provide me a simple strategy which I can apply in intraday for Indian NSE, be great. I know as a practice in this industry to provide, it is not a practice to provide strategies if you can provide some help. So let me give you my opinion on what I've underlined here. First of all, when you're using technical indicators, it's no different what I've talked about in the past with technical analysis. You cannot use technical analysis purely to forecast. Let me repeat that. You cannot use technical analysis to basically forecast the markets from past data. It's just not possible. That's why you're getting negative P&L. The other thing is no different than machine learning, because I've looked at some machine learning in the last few days, and really it's no different than technical analysis. Now I'm going to tell you why. So if you're using open, high, low based strategies, fine. But here's the problem. You're getting some success, but you're still getting negative P&L. That's the problem. Because you're not with technical, even machine learning, maybe not so much in quant, but you're missing a very important element when you are looking at the markets. If you're just looking at historical data, now I don't know what kind of data, but if you're just looking at price action on a particular set of assets, your issue is you're not factoring in supply and demand for that particular stock. You're not factoring in things like news events that will impact the stock. And you're also not factoring in things that can affect the input costs of a company, that affects the stock, and a whole host of other things that technical analysis does not cover. Quant does not cover this. I mean, it depends on the kind of data that you're using, but you need to from a fundamental perspective, know the fundamentals of the industry. You also need to know the fundamentals of the economy. You also need to understand a variety of other things that affect price on a particular stock, without a doubt. Now, you're asking about any kind of help when it comes to things like stock. Okay, let me show you something here. Now I know because you're a member of mine. Let me show you a thing. Okay, continuing along, for anybody who's new to this, I have here my Quant League membership. When you become a member, just come under the Indie Python Algo Trading course. As you know, I'm using Python now for my basic strategies, and part of this course series is going to be originally going to be 3 strategies, but now it's going to be reduced to 2. But right now, what we're learning is just the basic building block infrastructure that's really obviously important. So what needs to be understood here is the very first phase, okay? What you're going to find in terms of strategies, hopefully this could and should help you out. These set of Python scripts are really important to use and understand arbitrage. I mean, let's face it, in equities, in the world of stocks, probably the number one most popular way to make money in the stock market is just basic, simple arbitrage. Here, we are using government data to study the market, to use that data to start scanning hot market sectors. From there, we can then be able to determine and pick our long and shorts for the arbitrage opportunities. From there, you can then use technical analysis, statistics, and some other measurements as well to factor in the timing on your trades. From there, once you put on your trades, we need to talk about position management and how to assess the risk once you put on those trades to measure your exit. Okay? And out of that, also, we need to talk about your basic, primitive, self-adapting position, risk management and money management techniques. So I am covering that. These have been already scheduled for every Tuesday starting, I believe, sometime in May. Phase 2 covers, again, the fundamentals. We're talking about things like futures so we can understand the pulse of things like treasury, things like commodity for input costs on the stocks that you want to trade. So out of this lot, we have here a variety of new units that I've been adding to study market opportunities that come out of what's coming out of this. Not only that, but if you want my opinion, when you start looking at these type of strategies, namely equity, they're going to pay you peanuts. They're going to pay you pocket change. But when you start looking at, and I have not gotten to this level yet, but I'm approaching it, I'm about halfway, 2/3 of where I need to be with what I'm presenting in this content. Once you start moving into option trading, you are now moving into another level of potential returns. Those returns are magnitude of 2, 3, 4, or 5 times of what you put on in terms of what you're willing to pay out for premium. So if you're asking me, you want to trade like poor people, that's what you focus on, is the pair trading. But if you want to trade the big money, the big boy stuff, you move into options and later on Forex to look for wild volatility movements. And we've seen them time and time again. I'm going to be doing a trading powwow. We're going to talk about so many opportunities that nobody talks about right now is British pound volatility. You can make a boatload of money from these type of trades. So the pair trading is where the amateurs play. Okay, let's just get that out of the way. So that's one of the strategies I'll be presenting over the next couple of months, starting sometime in May. Once we wrap up all these the infrastructure stuff. Okay. So let's continue on with the second paragraph. Now, also it'd be good if you highlight the best way to find strategy parameters. I feel strategies I am trying to develop are not bad, but I'm having trouble finding their parameters. The approach I'm planning to take is to use my backtesting framework to run against multiple parameters and try to choose the one that works with the best result. Okay, again, let's talk first about backtesting. Backtesting, a lot of the professionals do not use. The insiders don't even look at backtesting because we know that past performance does not reflect what's going to happen moving forward in the markets. It just doesn't work that way. As I said, there's a number of other factors a lot of people do not factor in, like supply and demand on specific commodities that will affect pricing of stock trading. And I also need to mention about stock trading is that that's where the last place that most of the professionals trade in, because if you're going to make $100,000, you're going to give back $100,000, and that is proven based upon what I've highlighted here. As I said, I'm getting success with trading strategies, but many days having negative P&L. So that's what I mean. If you are playing exclusively in stock trading, this is what tends to happen over the long run, and that means you're going to give back through your negative P&L back to the markets. And that is not a smart way. And a lot of that has to do with things because what you read in places, I don't want to mention names here, but you're reading, well, you should be backtesting your trading strategies and you put it out there and pray to God that you make money. It doesn't work like that. Markets don't play like that. There is things like random walk theory, various parities and equilibrium in the market that brings back profit, brings everything back to mean. So You don't want to trade the days when that's happening. Otherwise, you're giving back your profit. That's why part of what you're learning in this strategy here in the phase one is part of it. A lot of people need to understand is the issue is you're not really spending most of your time developing trading strategies. Most of your time when it comes to any type of trading, manual or automated, you are managing portfolios. You need to spend time on your portfolio management and tweak what you are on what you are setting as parameters. And your system should be able to do that dynamically. That's what this phase does. Right here, this phase one does exactly that because it's looking for a certain set of parameters in the market while it's listening to the markets, while it's analyzing where the market opportunities are, because guess what you're doing? You're looking for the hot market sectors. So that's what you're trying to do, is trying to look for the opportunities on the low, buy on the high, dump at the high, and get out and profit, and don't hang on to those trades, don't hang on to those positions when they start to go negative. And that's what this strategy will show you. So again, all that's taken care of, and that will also be done dynamically. So we are covering that. So I'm hoping you understand that. But here's a big caveat that people need to understand. What I present here and other strategies will no longer be made available to anybody. These will be removed from my membership. These will be up for a very limited time. Come probably towards the end of the summer. You will not see these ever again. Because these are very valuable to have. These consistently profit, and I'm telling you, I've been testing these time and time again, and they are consistently winning better than the S&P 500 because of these theories. And I've seen trading opportunities in a week where you can get nice 20, 25, 30% return. But once you start moving into the options area, that's where the big money is, and that's where the big money traders go in, because that's where the opportunities lie. So again, all this content that I'm presenting live will be removed. The other big reason I'm doing that, not just because making everything all exclusive, but I'm trying to light people's fire under their asses to get themselves looking at this stuff, because even if they buy into my membership, they're not taking advantage of that opportunity. So this is a way to force people into that. So again, this will be up for a very limited time. I see these queries all the time that people are profiting, but they're giving back to the markets. And I've explained that already in this video. Hopefully you get it. Hopefully you do the right thing. And maybe not, you may want to explore joining this Quant League membership. Hopefully this will help you out. And if you're ever interested, come out Tuesday nights to all my events. I can show you where you go if you want to see how we're doing and our schedule. You come under the blog part. What you'll find is our meetup events right here. And we got them all listed over the next couple of weeks. Okay, so they're there, and you can also find them on our Facebook as well. Okay, and that's how you can find what we're putting out there. So tonight will be, or tomorrow night will be Redis. Next week will be Interactive Brokers, and on and on and on and on it goes. So hopefully I'll see you at one of these things if you decide to join. All right, have a good day.